I want to start with the retail names. Doesn't look like they're going to go into a good back-to-school season, even though the higher names seem to be performing well.
Yeah, lately RTHs were acting better than some of the other sectors. You saw, Home Depot come out with decent numbers, and they were met well. Walmart also, Lulu, some of them actually went back to resistance. If you take a quick look at the RTHs, you'll see that this group came back from the lower pivot and retested, some of the old resistance. Okay, so that's an area to sell. Now the question is, will it come back in, hold higher? So if you're looking at this indice, make sure that this 98 area holds to give us some potential of upside momentum. If this breaks, we could see a retest of this lower level just like the markets.
Okay, so let's move into the semiconductor space. Benchmark actually took up its sector rating to outperform yesterday, thinking that fundamentals are going to get tested, and this is a great time to get in.
There are some fundamentals that are really strong in the semis. Right now, the group as a whole is not acting well. You'll see here in the SMHs that it didn't even get close to coming back to retest the resistance. But it is flagging, trying to hold higher. If you need to be along the semis, if you have to have high-level stops right now in this market because that's how dangerous it is. If we start breaking below 29, you get out because there will be no more momentum for this, and we could easily test this this lower area, which is about 27.57. And I think if you're going to look at the semis, obviously you watch Intel. Intel can help, and Intel, if you take a quick look here, we talked about this is one of the stocks that people might park some money. You had a low put in versus lower support. It's trying to hold up. If this doesn't hold the 20.25 area, it could really retest this 1950. So same patterns, just different numbers for stops.
Now how about the industrials? That's another space like the financials where there's so much headline risk. Now we're hearing about double dip recession is kind of what the media is all over these days. What do we do here?
XLI or the industrials were really good for two reasons. One, they gave us clues that this market was going to roll over. Remember the Head and Shoulders top? That was the first group with the home builders to lead us down, which gave us some conviction that the SPYs and the diamonds would follow suit. So now if this group rolls over first and continues, you better be careful if you long anything. So if you take a quick look at the XLI, you will see no real bounce here, guys. Remember this Head and Shoulders pattern, here, this broke first. It only came a little bit above, lower level support. So if the XLI starts to break below 31 and doesn't hold 29, you're going to know we'll be at new lows. So watch this for some clues, see if it can hold 31. If it doesn't, same story, different channel. You better be careful.
Right, so the energy space, that's a name we did great with. Oxy was one of our first calls, in fact. But now oil's moving back up to $90 a barrel. So this is starting to get interesting again as we're testing a very key level.
Yes, in oil and in this group. And this group, came off quick, but then it also bounced back quick. This, in my opinion, is one of the leading groups. But when the markets are under pressure, they all get pressured. But OAHs, you'll see that this had a pretty big, bounce right back to the old support that becomes resistance. Watch 130, same type of scenario. Can it hold higher? If it can't hold higher, use stops because this can easily also test the lower level. So 130 is your level here in the OIHs.
And to wrap it up, the financials, Scott, I could stand here all day. I can't find anything positive to say.
And everyone looks for something positive to say. I feel like everyone wants to buy these things. America wants to buy these things, but they keep disappointing us with all that overhead supply and headline risk. This group could really intensify to the downside and psychologically affect the markets because these lower areas in these key stocks, they're not really resolving to the upside. There was no bounce. If you look at Morgan Stanley, you'll see here, look at this lower level. Look at this lower level pivot, Jill. It's crazy that it did not bounce at all after, look at this flag. This is when they came out with earnings. Everyone's like, Morgan Stanley's the new Goldman Sachs. Pow. Then it broke through this support. Now, if this starts to break below this 17 and breaks, this actually even 16, so I would say 16 to 17, you're going to see some fear come back in these banks, and all of them could start trading lower. So that's something really key to watch.
Right. So fundamentally, things don't look nice. Technically, it looks a little bit scary on the charts. What sector are we looking at that has some glimmer of hope?
I would just say in every sector, trade the leader. Look to see what could lead what. Right now, it seems like the financials could lead us lower with the industrials. Sectors that are holding up better right now are retail, tech, the oil group. So you want to stick with the strongest ones, but you also want to watch the weakest ones to give us some clues on whether or not we do head lower.
Right, especially the financials and the industrial group because they are such important components of the market overall. We're going to listen to this quick message, and when we come back, we dive into the trend.